Alright, so this video is going to be a bit different than the normal weekly recap videos I do. And in this one, I want to talk about a concept that's really helped me in trading, and it's very simple as well, which is called order flow. And order flow can be basically summarized, or at least I summarize it as something that's been respected or disrespected. And this has helped me no end when it comes to taking trades, but also staying out of trades I shouldn't really be in. So if you've got any questions on this as you go through the actual video, drop them in the comment section below and I will get back to you. But for now, we'll go on to the charts and I'll show you what order flow is all about. Alright, so here we are on DXY, and for those who have watched the previous videos, you'll know that I use DXY a lot when it comes to my trading style. Now we can see here, this is an example of what order flow is, but we can see here we've got a fair value gap. We've got 1 candle, 2 candle, 3 candle, and that is leaving a gap in the middle there, which is our fair value gap. Now, order flow is basically looking at, is this going to be respected or disrespected? An example of being respected is price going to come into this fair value gap and then push away. If it disrespects, then we're going to get it ran through, and it's important to have a body closure below this gap, okay? So I'm just going to play this forward on replay mode and just share an example. You can see it's not tapped the fair value gap yet, and just there, that is an example of disrespect, okay? Why is that? Because there's a body closure below the fair value gap. So now we can discredit that bullish fair value gap. So if we let price play on a little bit, we can now see a bearish fair value gap, okay? And to make things a bit better, we've also got something called an inverse fair value gap. An inverse fair value gap is where one fair value gap has been ran through by another fair value gap, okay? So this example, we've got a bullish fair value gap there. We've also got a bearish one here. But this bearish one has disrespected the bullish one, which means this is a bearish inverse fair value gap. So the same principle applies. If this is going to be respected or disrespected, we can basically see if it's going to get ran through, which is a sign of disrespect, or if it respects, price will come into here and then sell off, okay? So let's have a look at this. So price has not entered it yet. Now it's tapped straight into it. Now you can see here, and this is a telltale sign of respect, as soon as prices come into this fair value gap, this bearish one, we've created a long wick away from it, okay? That means prices came up, doesn't like that area, and it's starting to respect it, okay? So that's a telltale sign. So when you see something like this, I know we don't trade DXY, but something like this would be an example, potentially covering that, targeting liquidity, and, you know, playing that out, okay? You can see TP, right? Of course, this is in replay mode. I'm just sharing an example of what order flow is, okay? So let's go back a little bit. I played it forward a bit too much there. Let's do this one. So that's one example. Let's do another example. Right, you can see here, liquidity has been taken. This, again, is an example of reading order flow. And we can see that when liquidity has been taken, we've created a wick, right? So again, it's a sign of respect in terms of liquidity. Liquidity has been taken. If I saw a body closure down here, I would more than likely still look for shorts, okay? But because we've got a big shoot up, you know, this is all bearish, and then we've got this big push up after taking liquidity, that is a, you know, telltale sign that there's orders that have been taken in the market, okay? So what we've got now is these bearish fair value gaps, okay? We've got bearish fair value gaps here, like so. We've got 2 of them. And again, the same principle applies. If we come in and come back down, that's a sign of respect. You know, it could be this one or it could be this one. If we run through them, so if we run through them like this, body closure above, then that is a sign of disrespect, which would tell me, because these bearish fair value gaps are being disrespected, price wants to come higher, right? As well as building a story off this liquidity. So I'm going to play forward. You can see here we've disrespected one straight away. At the moment, this one is being respected. So let's just play it forward. Now it's been disrespected, okay? So both these bearish fair value gaps are now disrespected. But what we've now got are an inverse fair value gap here, right? This bullish fair value gap here. And that could be a potential area that price is now seeking, right? Because we know it likes to seek liquidity or fair value gaps. So same principle applies. Is it going to come in, respect it and push away? Or is it going to run through it? So we'll have a look. It's not in it yet. Now it's tapped into it. And if I play it forward one more time, look at that. Sign of respect. Okay. Now, of course, I'm not going to talk about entries in this video. That's something I do on the lower time frames. But let's say you are taking a trade from there, on the lower time frames after you start seeing some respect, then you could get in something like this and you obviously take the trade, right, for a nice potentially 2R, something like that. So play it forward, there you are, okay? So that's what order flow is, right? And this happens all the time, okay? So I've got another bullish fair value gap here and here. Same principle applies. Is it going to come in, push away to respect it, or is it going to run through it? And which one is it going to be? So play it forward. This is currently respecting. Play it forward. Now this one has been disrespected, so we can discount this. Now it's tapped into this one. We've got a bit of a wick here that's been created. Play it forward. We've got another wick that's been created. So again, it's respecting. And now we could potentially set entry, something like this, covering the low, something like that potentially, and going for, a 2R trade. Let's play this forward. And there you are, right? So hopefully this helps you understand what order flow is. We're just looking at what's been respected and disrespected. Of course, you can combine liquidity in that as well. But hopefully this is a simple way of reading the markets. And if you've got any questions, please do drop them in the comments below. And yeah, I'll see you on the next video. See you soon.